Okay, so as you can see that the candle closed at 9:30. So now you will be looking for some sort of liquidity. Okay, so actually you should be looking for liquidity before 9:30, right? And if it sweeps the liquidity and comes back, and the market structure shift happens, your entry must be after 9:30 a.m. Okay, it can, for example, let me show you. If there is liquidity, right, and price sweeps up the liquidity at, let's say, 9:20 a.m. and then we have a market structure shift at 9:25, right? And you have your entry, where is it? Okay, you have your entry at here, right? If the price goes into your entry zone before 9:30, you will not be taking that trade. Okay, you just gotta follow these rules. Okay, I know what I'm saying. You should avoid that trade at all costs. But if the time is 9:30, right, past 9:30 a.m. and it goes to your POI, then you take that trade. Boom. So for this example, we have our candle close at 9:30. So where's the liquidity, guys? I can see this huge swing high, right? This is a clear, significant swing high that I can see. So, and one more thing, guys, you want to look for the market structure, okay, the overall direction of the market, and you want to take the trade in that direction. So as you can see, price is bearish at the moment. And if I go zoom out a little bit more, you can see that we are bearish. And considering the, the situation of the world right now, there's so much wars going on. I would recommend that you only take shorts for now, because the trend. So you got to just follow the market structure, right? If the market structure is bearish, you only have to take short position, and you only want to be looking for a liquidity sweep to the upside. Okay, and then you wait for market structure shift and you take your entry. So as you can see, at the 9:30 a.m. we have this candle, and if I play this through, okay, so once the price is near my zone, the liquidity zone, I will drop down to the 1 minute time frame and I will wait for a liquidity sweep. So as you can see, price swept the liquidity. Now I want to wait for a market structure shift. So let's see what happens. And there you go, we have a market structure shift. One more thing to note, guys, is when market structure shift happens, it should happen with displacement. And what I mean by displacement is, let's say you have this, right? And if price breaks the structure like this, so let me show you. Yep. If, oh my God, this is a terrible drawing, but I hope you get the idea. So if the price breaks the structure with, a very clumsy market structure, there is no momentum in that move that breaks the structure, then you will not be taking the trade, because when price came down, it generated this liquidity, right? And I would recommend that you don't take this trade, because there was no momentum, there was no volume when the structure broke. But if price breaks the structure, for example, let me show you. If we have this structure, right, and price breaks the structure with momentum, like for example this, if you see this, you got to take your entry. So as you can see, we have this huge candle, and then we have some sort of wicks here above, below the fair value gap and the order block. And as you can see, we broke the market structure. Now, as you can see, there's some fair value gap around here. So I would take my entry from the fair value gap. You can take your entry from the auto block, but sometimes you're going to miss the trade. So I would recommend that you only take your entries from the fair value gap. And you can see it was filled around here, right? So we can take our entry from the remaining pot, or we can just take the entry from the original pot. So it's just going to be fine. And we put our stop loss right above the body of the candle, or we can either put it to the high of the candle. And for the take profit level, we could go for this level right around here, because this is a significant liquidity level. As you can see, this is a significant low, right? And between this move, there are some fair value gaps. So you can see we have this fair value gap, and we have this fair value gap. So you must be taking some partial profits, okay, when the trade is in the play. You should not be holding your trade. And once some sort of structure is broken, for example, this structure gets broken, you're going to go break even. So this is very simple. Once this structure breaks, you will go break even. So let's see how this trade plays out. So if I play this through, we got our entry right here. And if I play this through, you can see that the price is going down and we hit our take profit level. So that was an 8.42 risk to reward trade. Very excellent example. I'm going to give you guys a few more examples. So yeah.